In this video, I am going to look at something that's going on with Amazon. So, two disclaimers that I would like to put forth before moving ahead. Number one is that I am personally a little prejudiced against Amazon because I sometimes I feel that it's not a very good business model that could be scaled, but many times I've been proven wrong. And the other is don't make investment based on my ideas. So I'll be using a few sites to check out what's going on with Amazon, what is going on with its peer, what's going on with the S&P, what's going on with the return and volatility, and some financial bets that we can take. So I'll be using Google Finance and Yahoo Finance and few of those sites. So let's move ahead. So the first thing that I would like to talk here is the return of Amazon as compared to its closest peer, which is eBay, as compared to the big index through which it gets traded, because everybody would buy the S&P index, which has Amazon, and checking out what's happening. So if you invested $100 a year ago, then you would have the highest return in Amazon, the second highest in eBay, uh, the third highest in S&P, and if you would have invested in the Chinese stock exchange, you would have gone 20% down. So there's this thing that is weird and that makes me look at Amazon is the phenomenon high return. Now, one of the companies which is performing in a very similar trend is Google, because Google spiked in spite of no spike on any other thing. So let me just get there. Okay, where is Google? Okay, here we go. So I don't see that spike here, but yeah, Google spike a lot in the last 6 months. I think it should be uh, the one just below this, 8.17%. And the spike in Google was very much, but it was much again in lines with the other sector peers like eBay or any other. So there's something wrong with Amazon, which especially that's happening after the end of July when it has shot up more than any other stock. Let's try to delve more into this and see what's happening in the other parts. One of the things that I used to hear about Amazon that it has a negative earning from a very long time. If you see the net income available to stockholders after doing everything, the capex and the one-time item, it has been negative for a lot of time. Although it's sitting on a lot of cash, but it's not a profitable business for a very long amount of time. Interestingly, when you compare it with the peers that Yahoo gives to us, I think they should be Walmart, but I'm not sure, and Apple and the industry does not have such a negative net income as the Amazon has, but still Amazon is going up and up. The holding of Amazon, Capital World investors, they are holding a lot. Vanguard, I think they must be holding for either the insurance companies um, or the pension funds. I think the same should be for Capital World investors, but number of shares held by institution and mutual fund owners is 68%, which means that a lot of institutional investors have jumped in. If you see the total revenues, has been inconsistent, but it's not a great increase. But I think they told that year over year it has increased some bit. The net income here is 92,000. I think this should be million, but again, I'm not sure. But there's nothing strange here. If you look at the past, there have been many negative losses. There are some statements which you can verify that Amazon is going negative for a very long time. So that was about the performance of Amazon as compared to peers. So we saw that Amazon is has uh, the stock price has gone up, soared in spite of its peer not performing so well. The two closest peer are Google and eBay that I have taken for this analysis. I've also compared it with S&P because many people would buy just the S&P, and that would in turn increase the price of Amazon. I've not talked about the beta of this with S&P. Now I'm going to move upon the implied volatility. So based on the talk that I have been doing, I think that there is uh, something strange with how it went up. But if we look at non-directional bets, and I'm using ivolatility.com, which is implied volatility, the historical volatility of the last, especially 10 days, is very high. It's 48% as compared to 30 days. The 52-week high and the 52-week low, we have got a very high implied volatility, historical volatility in the recent times, and now the implied volatility is again very high. So, uh, 1 week ago it was 33, currently it's 35. A 1 month ago the implied volatility was 24. So, this is where I think that it should calm down after some time. If it's not calming down after some time, we can take a bet on the implied volatility. So, I guess if you believe that there is going to be more volatile period in the coming time on either direction, then you, and this implied volatility is not reflecting the movements that you might see on either sides, up or down, then you can probably buy this, which means that you can buy a put and a call, and you can benefit from the low assumptions of the implied volatility which is given here. Uh, the next part is put to call ratio, and the put to call ratio for Amazon. Let me check. It has been highly traded after this June, July. So I think a lot of people are buying here. Let me check what the two signs mean. Call option, put to call ratio is 0.99. So put to call ratio would automatically be 1 because of the put call parity. So the put volume, call volume, the put to call ratio is 0.99, which means that people are buying a lot of put. Let me check with the put volatility if it's higher. It's not so here because the put is not expensive, the calls are expensive, so people are betting that there's some more spike left, but this is strange. So we can see that the implied volatility of the Amazon stock is 35%. If you believe that there are some more spikes left on either side, then you can bet on that. If you believe that the volatility should calm down, or it will follow the same direction, whether up or down, in a very slow fashion, then you can short volatility. So buying volatility is like selling a put and buying a put and a call option, and shorting volatility is like selling a put and a call option. So just being short on volatility, which means that if something happens slowly, then you're going to gain money. If something happens very fast on either direction, up or down, then you're going to lose money. Is there some news that is giving us trouble, and is the directional bet worth it? Now these are the two questions. Let's try to see what's going on in the other news section. So I'm just going on the headlines to see if there is anything wild. Apple, Amazon, Netflix decline amid skidding stock market. Okay, Amazon hiring staff for new restaurant. And look here, four low volatility stock to sell the median mayhem. Amazon stock up despite Amazon stock down despite finding a technology acquisition plan. And this reminds me of Amazon buying all the negative earning companies. So these stocks would go down because all these companies are loss making, but they assume that in the future it will become positive. So all of that is based on the expectation. The reason growth stock investors will love Amazon. Let me see if there is a recent reason that would justify. We go to the previous week. Cash flow in Amazon. Sales to asset ratio is one metric to check. Bottom line. So sales to asset often looked by investors. Right now, 1.8 companies have 1.8 sales for each. Compare this to industry average. You can say Amazon but more efficient at large, and so on. Now, there is two things that I want to mix and I want to take a bet. If I were to take a bet, the one thing that s- I would bet is that Amazon would come in line with the eBays and the Googles and the other financial peer, which means that I'm not bullish on Amazon. And the other bet is that it will come down slowly, if not very fast. So those are, if you make those two bets, um, then we can buy different call and put. So if my mandate is like Amazon is coming down, but coming down slowly, and I am short on volatility, which means that uh, it's not going to move more up and down. The spike period is open. Then I can probably prepare a strategy where I would benefit if these three things happens, and I can implement that using put and calls. So that's my mandate on Amazon. How exactly to do that using put and call, we'll check that shortly. Thank you for watching.